Alright everyone, in this video I want to show you guys the biggest mistake that options sellers make when they are selling a covered call on their stocks. So let's say you're running the premium cycle, you started with a cash secured put, and eventually you ended up being assigned on your stock where you sold these cash secured puts, and now you own 100 shares of this stock. Let's make it on this example right here on XLE. So for example, you were selling cash secured puts on this support level right here, and eventually you got assigned at $53, and now you are the proud owner of 100 shares. And the number one mistake that a lot of option sellers make is they immediately want to move to phase two and to sell a covered call. So they choose a strike price which is above their cost basis, for example at $55, and they're selling a cash secured put where they will collect the premium once again, and they're committing themselves to possibly sell their 100 shares at this price level. But what I like to do is I like to only sell a covered call after I have been assigned on my cash secured put when the stock did already go up a lot. So I don't want to immediately sell it when it dropped and I ended up being assigned. I want the stock to rise a lot. I want to check the RSI. So that is one metric that I check. I want the RSI to be sitting above 50. If it is sitting at even above 70, then that is a very good sign to sell a covered call right now on your shares, because that means that the stock is currently massively overbought. And when it is massively overbought, it is most likely that it is going to come back down. As we can see right here, it went massively above 70 and it came all the way back down to 37. And I want to wait until the RSI is in this range at least above 50, if not even above 70. And then I want to sell a covered call at an even higher price level, because then I can collect my premium. I have a very low possibility that the stock is going to continue rising and going through my covered call strike price, because the main idea right here is once you end up being assigned your shares, you want to be able to sell covered calls as long as possible on your position to continue generating a monthly income from the premium that you receive on the covered call. And step by step, you want to increase your covered call strike price, because if you own it right here at $53, let's say you wait that the stock rises a little bit, then you sell your first covered call at $57, and you did not get assigned because the stock only went up to $56.5. Now you can sell a new covered call at an even higher strike price, for example at $59. You can collect the premium again. You let some time pass by and you sell another covered call to the upside. So you can increase your strike price more and more and more, and therefore increase the range between your assignment price and your possible price where you are going to sell your 100 shares eventually. You can increase this range, collect premiums on the way in between, and profit from a much larger capital gain in between your assignment price and your price where your shares got called away. Because if you just move on immediately, get assigned at 53, sell a covered call at 55 and get assigned, you only have $2 in between, so only $200 in capital gain profit. But if you're able to eventually get assigned at 63 up here and just increase your strike price more and more, you have $10 in between your prices, which is going to equal $1,000 in capital gain, plus multiple covered call premiums that you collected step by step by step all the way to the top. And this is very important, so stay patient here, guys. It is going to pay off for you to not move on instantly. Sometimes, especially when the stock is currently all the way at the bottom on the RSI, it makes sense to be patient a little bit and wait for some upwards movement, and then you're going to sell that covered call. So this is very important if you are trading the premium cycle and you really want to optimize the gain that you are making trading this strategy. Always pay attention to this. So guys, if you want to generate a safe passive income, subscribe to this channel, leave a comment under this video. You guys can also check out my free course. Click the link in my bio. I have a completely free course for you guys. And you can also join my paid community where I have a very detailed course so you understand this strategy in detail. And you guys will also be a community member of my live community where I am sharing my personal live trades, so you guys can benefit from that as well. See you guys there.